money for the impacts you're having, and it's probably be better to have a better understanding yourself of what these impacts you have are, and actually you may have assets that you don't know about, so there are clearly opportunities there. The second one about saying, ooh, you know, won't it be bringing, you know, campaigns against me? Well, actually, there's really a push, there's an increasing demand for companies to be transparent. And if you say, look, like Puma did, you say, look, this is a real problem for us, and we need help, and we need to partner with others to try and find solutions, because businesses cannot do this alone. It's a really complex topic, and we need to try and find solutions together. So it is an opportunity to be really seen as a leader and being quite open about the issues we have to face together. More generally, you know, opportunities about valuing nature. The main thing is, the reason we developed this guide is because we think that valuing nature can help business make better decisions that will then lead to better actions. It can also help save costs, reduce taxes. We've seen cases where you know, you can get new revenue streams. It's also a way of assessing liability and compensation risks. We talked about being a leader, preparing for stricter legislation and regulation, and perhaps being seen as a preferred partner in this space. So we developed this guide to corporate ecosystem valuation with 14 of our member companies. It's really a guide that was developed by business for business. We did it with 4 partners, of which IUCN was one, as you can see here, and they all looked at different cases, and unfortunately we don't have time to go into them, but we have 4-page summaries on our website, and I'm happy to talk with any of you about these specific cases later on. But in this guide, there's one page, which is my favorite page. Right at the beginning, we got the CEOs of these companies to sign a message, and in this message it says, we see the value of ecosystem valuation, and I think that's pretty strong, coming from some of the biggest companies in the world. So a question for you now is, are these the only ones that see the value of ecosystem valuation, and how, you know, how will this progress in the future? And so I just wanted to get a show of hands of when will most companies, do you think, start reporting on their natural capital as well as their financial capital? If you think it's going to be between now and 2020, green. If you think it's between 2020 and 2050, yellow. Never red. Please vote now. Okay. No, keep them up. I'm still having a look. So there are some believers here that we're going to really progress this quickly before 2020, which is good. Mostly, we have 1 or 2 nevers, which is, I really hope is not going to happen. We need to progress on this quickly if we are really going to change the world. The yellow one, the limit of 2050, some of you may be familiar with WBCSD's Vision 2050, which is really to say, in 2050, 9 billion people will be living well and within the limits of the planet. And one way we can get there is by understanding natural capital, but also social capital and financial capital within a company. So it's actually, I was scared there would be more red actually in there, so it's not too bad. Okay, the guide to corporate ecosystem valuation, CEV. It's important to say what something is just as much as it is important to say what it's not. The guide is a framework for improving corporate decision making by including the value of ecosystems. It's a set of resources to help companies navigate through this complex jargon that experts such as Natalie and others use. You know, I don't know how familiar all of you in this room are with things like production cost and contingent valuation. These are new words, and although the field has been around for a long time, they are new for business, so the guide helps with that. And there are a few, sorry for going in the corner like that, but there are a few additional resources with the guide, such as this. I have a few copies that help go through the different techniques that Natalie was talking about. These are all freely available on our website. The guide is not a price list, and it's not going to crunch the numbers for you. And the last point is it's not a standalone methodology. We developed this guide to make sure it could be used in tandem, in combination with a whole lot of other analytical tools that companies use. One point that I think is important as we move forward on this is this hierarchy of valuation approaches. What I mean is that when you start off, you can do a qualitative assessment. So imagine we're looking at fish losses in a lake. A qualitative assessment would be to say that fish production the reduction in fish production was low, medium, or high. The next step is to take a quantitative approach and say, okay, well, there was a 25% reduction in fish productivity. And then finally, you can say a monetary approach and say, well, this is equivalent to $20,000 a year of lost revenue. Of course, monetary approaches are more compelling, and they're very easy to communicate and then to compare. But they're not always necessary, and in fact, if you don't need to go all the way to the monetary valuation, you shouldn't. If your decision can be based on a qualitative assessment, that's where you should stop before you start putting a lot of resources into trying to get to a quantitative or a qualitative assessment. And I just wanted to highlight that, because it's very tempting to say you want money numbers on everything, but actually monetary values are not always available for some ecosystem services, and they may not be required. So key messages to take away: business depends and impacts on biodiversity and ecosystem services. We think that valuing nature can really help business manage their risk and consider new business opportunities. We think that valuing ecosystems can help business make better decisions. And ecosystem valuation will increasingly be considered by governments, the finance sector, and business-to-business customers. And so the need to report, we see the need to report on natural capital, social capital, and financial capital will increase. And that's the only way in the end that we should report on a business success. And finally, that this guide to CEV is really complementary to other tools in a business portfolio. Thank you.
Well, I'd like to introduce Natalie again, who's going to talk about a practical example, and that's involvement with Rio IUCN's involvement with Rio Tinto in the context of this CEV issue.
I'm sorry, you have to listen to me again so soon after that first.
So Rio Tinto's in the session next door.
Yes, I will pass on the apologies of Rio Tinto, which have a delegation here, but unfortunately there's a parallel event on net positive impact just upstairs. And unfortunately they are there. I've been working with Rio Tinto from IUCN for 2 or 3 years now on a number of different projects. So I know this project fairly well. But let me present some general information about the company, which most of you will know that Rio Tinto is a very large global mining company which operates on all continents except Antarctica. They manage about 131,000 square kilometers of land. So they have a huge land holding. 31% of this is managed by operations. That's their actual footprint. and the remaining is used for exploration and in holding. They've developed a biodiversity strategy to help them operate in a better way in high biodiversity areas, which they are doing increasingly as they exhaust deposits in Australia, New Zealand and North America, where most of their mines are, and move into more high biodiversity areas in Africa, South America and parts of Asia, Southeast Asia, I think. Now this case study is looking at Rio Tinto iron ore, a subsidiary of the Rio Tinto group, which operates in Western Australia. This is a map of the Pilbara region. Basically 95% of Australia's iron ore resources are found in the Pilbara. So it's an area which has a lot of mines in. The Rio Tinto Iron Ore owns 14 mines, 3 ports, and a very large network of railways in this region. And it's currently producing 220 million tons of iron ore a year, which gets exported mostly to China at the moment. Now, because of economic growth, iron ore production is forecast to increase from 220 to 353 million tons per year over the next 40 years. At the moment, most iron ore production is above the water table. But for this increase in production to be met, the company has already started to begin accessing iron ore located below the water table. Now this requires dewatering, which is basically pumping out from aquifers large amounts of water and disposing of this water. And this process increases the footprint of mining by an order of magnitude. In the Pilbara and in much of Australia, there are traditional owners with land rights and extremely important connections to the land, to the landscapes, which are ancient, which are an integral part of their belief systems about the creation of the world. Rio Tinto has had a number of consultations and has made agreements with different groups in different parts of Australia. But those values are extremely important to be taken into account in decision making about setting up mines and expanding mines. And it's been a real challenge to think about how to do that in the context of evaluating the impacts of dewatering and the different options for disposing of the water that are available. Now, dewatering can lower the water table for up to 140 meters, and that has it may or may not have impacts on the ecosystems above the water table, depending on the geology, the hydrology, and the ecosystem. So there's a lot of research going into hydrogeology in the area and the ecosystems and the links between the two. But the basic issue for iron ore, Rio Tinto iron ore at the moment is how to manage this large drawdown of water and how to manage these very large volumes of water which they have to dispose of in the least damaging way. Now, quantifying the dewatering volumes has been quite difficult, as has looking at the potential biodiversity and ecosystem impacts. Just on the hydrogeology side, to predict what the ecosystem impacts of dewatering are going to be, you need quite a lot of information about the volume of groundwater to be extracted, the duration of dewatering, the total area to be impacted by dewatering. So the cone of depression, we may drop the water table by 50 meters on the sides of the cone of depression, but that is going to be a much deeper drop in the center. You need to measure that cone of depression and be aware of the ecosystems above that. You need to look at changes in water quality. In this area that we're looking at, there are 2 separate aquifers, but if there are connections which are not discovered, you dramatically decrease the water quality as the one aquifer links to the other. And then you need to look at the time that it takes for aquifers to recover after they've been dewatered. So these are enormous challenges, and they're challenges which need to be addressed because much of iron ore production in the next 20 years will be shifting from above to below water table. And we'll have mining companies who are managing very large quantities of water. Now, the specific project that we've been working with Rio Tinto Iron Ore on is looking at a particular mine which has exhausted the iron ore above the water table and is currently about to move below the water table. And they're trying to think through the different water disposal options that are available. Now, in this area, there are 4 main options. The first, and there's a water use hierarchy which has been discussed with the government of Western Australia. So they have a clear preference. So this is a prioritized list of water disposal options. The first is to supply the water to nearby towns and to supporting mine operations. There are a number of towns and mines use a lot of water for dust suppression and activities like that. There's also the option of recharging depleted aquifers. Now, the towns that are in this region have been there for 20, 30 years, and they have been using water from certain aquifers. So you can use the water that's being extracted from the aquifer to get to the iron ore, and you can transport that and pump that down into depleted aquifers. Now, there are technical constraints, and there are also economic implications for this. The residual water that wasn't going to be used by towns and mines and that could be rejected was going to be discharged into some creek beds. And these are ephemeral creek beds which are dry for most of the year. It's an arid, semi-arid environment. And you have an ecosystem that has adapted to the seasonal rainfall and so on. So creating a continuous flow of water would dramatically change those ecosystems. So there was some concern from the government about the quantity of water and the frequency of water disposed into these creek beds. Downstream, there are a number of ecological communities which should not be affected by additional water. So there have been limits set on the amount that can be discharged into creeks. And finally, some creative thinking was used about what are the other options for disposing of water in a relatively benign way. So they looked into bottling water, but it's a very isolated area and the costs of doing that are prohibitive. They looked into piping the water to coastal areas where they're currently constructing desalinization plants because Australia has a severe water shortage issue. So they looked at these various options which come with financial costs, which are the ones which are usually considered by companies. But the idea was to introduce valuation to the ecosystem impacts to try to feed those into a more full cost accounting of this exercise. Now, Rio Tinto has a commitment to net positive impact in each of its operations. And so there was some hard thinking in parallel to, what do we do with all this water? And they have a water strategy which guides them in that thinking. There are also opportunities associated, and I'll get into those opportunities for creating biodiversity offsets. And these opportunities are linked to the pastoral stations that surround the mining lease in this area. The Marandoo mine is surrounded, there's a large national park on one side, and then it's got large pastoral stations on the other 3 sides. Rio Tinto leases and manages 1.5 million hectares of pastoral land. It's done so for many years, and by law it must have cattle on those stations to maintain those leases. So in the last 10 years of drought, and the drought has now ended last year, but in the last decade there has been a severe drought, and the combination of drought and cattle on a fragile ecosystem has resulted in severe degradation of this native habitat. So the innovative thinking in this project was to look at the possibility of using the water from dewatering to start growing hay on a small part of the pastoral station, to contain the cattle on another small part of the pastoral station, and to basically destock the remaining large part of the pastoral station. And either through natural rehabilitation or a more active restoration approach, to allow those large tracts of bush, native bush, to recover, and to measure the change in biodiversity levels, to quantify those changes, and to use that in a biodiversity offsetting